Hello, I'm Greg Hunter. Thank you for joining me today on USAWatchdog.com. With me, Nick Barisheff. He is the CEO of Bullion Management Group, also known as BMG. He's in Canada. Nick, thank you for joining us today on USAWatchdog.com.
Well, my pleasure as always, Greg.
I got to just first start off with what Geithner recently said, and that basically he was on television, and I guess this is his trial balloon, that we should just eliminate the debt ceiling and go to infinity, just like the open-ended money printing. What kind of effect could that have on gold prices, inflation, the economy, the budget? Give me your take on open-ended budget deficits, debt ceiling to infinity.
Well, to some extent, this is already what's happening. So Gartner's just telling the truth. We've had a debt ceiling, and every year that the U.S. hits it, then it's just raised. So you might as well not have one. Nothing's accomplished. So he's just saying, let's just do away with it and print to our heart's content. And essentially, right now we've got QE to infinity in any event. And it's really the only thing that they can do. When you analyze the situation, you look at Europe. If you take taxation and austerity, the result is reduced GDP and higher unemployment, lower tax revenue, and higher deficits. So as much as that makes sense, it makes the problem worse. We're already past the point, and Ron Paul said that. He says, we're past the point of this getting fixed. So it really doesn't matter whether you have QE to infinity. That's the only possible solution. And all it's doing is postponing the problem, hopefully to someone else's shift.
And maybe not. Maybe they're making it bigger and it blows up in somebody's face.
Eventually, that's what happens. It makes it bigger, eventually it blows up. And this is where there's never been a fiat currency in history that didn't end in hyperinflation and complete collapse. Not one single example in all of history. They all go exactly the same way. And it's just human nature. It doesn't matter whether it's a king, an emperor, a president, a prime minister, whatever. Eventually, they print too much money.
Well, along the way, you have Bullion Management Group, and you basically buy gold for people, or they buy it, and then you weigh it and serial number it and identify it and allocate that gold to, for example, me.
Right.
And if I call you up and say, oh, hello, Mr. Barisheff, I'd like to come to Toronto, and I'd like to go to the vault and go to the bank, and I want to see my numbered allocated gold. Not gold held in a pool, my gold. Can you do that for me?
Yes, we can, and here's some differences. First of all, we have 3 funds that hold bullion on behalf of investors, mostly Canadian, and they qualify for registered retirement savings accounts and the like. But we also have a second site, BMG Bullion Bars, which sells what I call the investment-grade bars to high-net-worth investors. We only have 5 choices in terms of 3 different sizes of gold bars. 1 silver and 1 platinum. But these are the bars that are traded in London. We're members of the London Bullion Marketing Association.
Let me insert here. These bars are absolutely tested for purity, absolutely tested for weight down to probably 6 decimal points, absolutely have stamped numbers, cannot be counterfeited, cannot have tungsten put in them.
Right.
These
it goes beyond that.
Near pure gold, silver, you hold with a number for me or your clients, correct?
Right. It even goes beyond that. The LBMA even restricts and looks at where the gold comes from in terms of a mining company. So, for instance, you don't get any equivalent of blood diamonds in LBMA gold bars. Okay,
it has to come from Canada or U.S. or someplace
doesn't matter where it comes from. Okay, so it's not, kind of a whole bunch of peasants, scraping out a living to find some gold that are then melted into a bar. That doesn't happen with the LBMA. And the LBMA has to, what they call a chain of integrity, which goes from the mine to the refiner to the vault. It's sold by LBMA members. It's kept in LBMA vaults. So that's where you have the chain of integrity and everything's trackable. We only deal with Scotia Makata, which is a division of the Bank of Nova Scotia, and if not the biggest LBMA members, one of the biggest LBMA members, and one of the oldest from Makata Metals, which was a U.S. company for decades. So we only deal with them to purchase the bullion, whether it's for the funds or for the bars, and it's also Scotia that stores it for either the funds or the individual investors on a fully allocated basis under a lengthy custody agreement. Now, if you're a high net worth investor and you own bars, we can have, like if you say you're coming to Toronto next Thursday and you want to see this bar, this bar, this bar, this bar, and we'll meet you there at 10 o'clock in the morning, we can do that. You won't get into the vault, but Scotia has a secure room off to the side.
They'll bring your bars that you have a sheet, your numbers, your weight, your property for you to look at, correct? Okay.
And that's right. We will have issued you a deed when you bought your bar, and the deed specifies all those details, the refiner, the serial number, the exact weight to 3 decimal places, the exact purity. So there can be only one bar.
So,
and again, because we're purchasing, we're an LBMA member, we're purchasing from an LBMA member, so you don't have to worry about tungsten bars and so on. It never gets out of the system to ever become a tungsten bar.
Okay, so that said, let's fast forward here to Germany. And boy, I'll bet you Germans, the part of the German public and the German parliament would have loved to have gotten your advice about making sure you get allocated gold accounts because, the Federal Reserve, they've asked the Federal Reserve to see their gold held in the New York Fed, something like 2,000 tons. And the New York Fed has said, no, you can't see it. What does that tell you about the Germans' gold? Or what could it tell you about the gold held by the Fed on behalf of the German people?
Well, it's not just the German people. Ron Paul has been trying, I think, for decades to audit the Fed. And only last year, there was a majority in Congress that passed a resolution to audit the Fed and to audit the gold, but it never got through the Senate. And, in Congress, it was both Republicans and Democrats that supported the Ron Paul resolution. So apart from the German, the Americans haven't seen their gold either. Okay?
What does that tell you about gold held supposedly
wonder,
for Germany and gold held for the American people?
You have to wonder, what the big fuss is, because why does it create that much of a hassle? Have a select committee of congressmen and senators with auditors go and count the gold, but what happens is it's more complicated than just counting the gold bars. What you have to do in a proper audit is trace ownership, because those gold bars could have been leased to somebody else, and even though they're still there, title is to somebody else. So you have to do a complete audit of the records, not just count the bars.
So do you think all of our gold is there intact? Or how much do you think is there that's not leased out if somebody else is making a claim to the gold owned by supposedly the German people and the gold owned by the American people or the Dutch people or anybody else who has gold on deposit with the New York Fed? Do you think that people have clear title to the gold they thought they had?
Well, I have to question that, and for a couple of reasons. One is that one of the first studies I bought when I started looking into this in 1998 was a report by Frank Veneruso. And Frank Veneruso did an analysis primarily of the GFMS supply-demand statistics. And they're the primary source of supplying those statistics. And he thought that the supply was understated because it didn't include leased gold. Like when you look at the supply categories, you've got mine supply, scrap supply, central bank sales, and that's it. But leased gold has to form part of the supply. And it doesn't, the one debate is that it's not zero, okay, but doesn't show up in the supply-demand statistics. So we can debate whether it's 5,000 tons or 20,000 tons or whatever, but it's certainly not zero.
And nobody knows what that is.
Well, according to Frank Benarusso's latest report, which was in 2002, he thought it was 16,000 tons of outstanding leases. Right?
Whew,
and
that's a lot of gold.
Gold is 32,000 tons worldwide, so that's half the central bank gold had been leased out, according to Benarusso. So without getting into the debate about exact amount, here's the other part when you look at the supply-demand statistics. So if you say there's no supply component for leased gold, then in demand there's also a missing number. And the issue is, what happens is the missing number is investment demand, because investment demand is the bottom adjusting figure to make supply and demand balance.
That's like
it's not calculated.
That's like GLD or you selling bars or people taking delivery or right?
Yeah, nobody from the reporting services calls me, Eric Sprott, Central Fund, any of these places to ask us how much gold we bought, we've sold, or anything. Nobody asks us that. So by not showing leased gold, what you've got is investment demand as an imputed number. So investment demand has always been much higher, but we don't know where it went. And the estimates for annual leased gold are in the order of 1,000 to 2,000 tons. But this can't be proven because nobody has the numbers. The central banks aren't transparent.
So we know there's a number leased out. Doesn't count in the overall supply, really. What happens if there is actually an audit and we find out that half or 70% or a lot of the gold is already leased out in the central bank's vaults and accounted for, and somebody else says, hey, that's my gold. I borrowed that gold. You sold me that gold. That's my gold. That's not Germany's gold. That's not Italy's gold. That's not France's gold. That's not the United States. That's my gold. What happens then when we find out the king has no clothes, or in this case, the king has no gold? What happens?
A number of things. First of all, the entity that borrowed gold is essentially short the gold. And there's going to be a gigantic short covering rally or multiple bankruptcies. That's number one. Number two, that there's going to be a massive loss of confidence in the currency involved. Okay, number three, the lawyers are going to get rich for the next 10 years arguing who owns the gold.
That's what you think's going on. That there's going to be tremendous claims against the physical assets because they've already been leased, loaned, sold, whatever.
Right. And that's why I say that's what's kept the price down. The central bank sales were relatively minimal from 1980 till recently, and now they've become positive. But what's kept the price down is the artificial of leased gold going onto the markets, and then the people that were short the gold, that leased it, anytime the gold price tried to rally, they borrowed more and sold it into the market and crashed the rally. And like I say, many people think that's a conspiracy theory. Maybe it is, maybe it isn't. It could just be, you figure this out. You can borrow gold today. You can borrow one year term for leased gold is 0.3%. And even at today's low T-bill yields, that's a decent spread.
So, question for you. If none of this had happened, if they weren't doing this game with the leasing and putting gold onto the market and basically suppressing the price, where do you think the price of gold would be right now?
Well, I think it probably could be close to double easily because normally gold surpasses the inflation rate. And that's one of the criticism. People say, well, since 1980 to this, gold hasn't even kept up with inflation. Well, because of this.
Hold on. Let's back up. I just want to get this. So where do you think the price of gold, numerically, where could it be right now if they didn't do all this leasing shenanigans?
Well, I don't have the figure in front of me, but it's well in excess of 2,500, just right now.
That's what you think gold should be now?
like an inflation-adjusted price would be 2,500 without anything else. But apart from inflation, and I'm talking about CPI measure of inflation, the thing is, what's more important is the gold price should stay in relationship to the money supply. Like if you overlay the gold price to the money supply and the debt ceiling and those numbers, you get almost a perfect correlation.
So where do you think the price of gold should be in reference to the growth of the money supply right now?
I think in some of Jim Rickard's material, and I'd have to, he wrote Currency Wars, and he did several measures. I think it was at M1, it would be 7,000.
Right now?
Right now, and M2, something like 10, and M3, it was some like ridiculous number that I can't even remember now.
So there are estimates that say gold should be, because of the money supply, around $7,000 today.
Right.
Well, then you wrote a book called 10,000 Gold, and that probably is going to be a pretty easy number to hit, isn't it?
Well, I think so, unless, you see, I don't see that anything fundamentally changing. Like we're now, even the U.S. government is projecting annual deficits of 1.2, 1.3 trillion. If you add the real deficit into it in terms of unfunded liabilities, it's more like 7 trillion. So if you start projecting that into the future without any kind of black swan event, derivatives blow up, ETF blow ups, any of those things, just continue on the path we are, you're going to get to 10,000 gold. Because the currency will be that debased because they'll be printing the money to meet those deficits. They're not going to be raising it from China and the rest of the world anymore. Fed will have to print that money.
10,000 Gold. Nick Barisheff, thank you for joining us today on USAWatchdog.com.
Always a pleasure, Greg, anytime.